Greetings, learners. My name is Mr. Simbi, and welcome to today's accounting class. Today's class, I'm going to be doing some calculations with you. Make sure you have a pen or a pencil, a paper, and a calculator as well, because we're going to be doing some calculations today. All right? Here's the question that I have for you that I want us to practice together. The question reads, Gwen received the appointment letter from Mario Jewelers. She was given the following salary scale. So remember the salary scale, it shows you your starting salary as well as the annual increases that you'll be getting. So I'm going to show you how to calculate some of these amounts and then how to use the calculations to answer particular questions. The first question that we're going to answer is calculate Gwen's monthly salary in her first year of employment. This will come from the calculations that we're going to do. What will her annual salary be in her third year of employment? What will her monthly increase be in her sixth year of employment? And how many years will she have to work before she reaches 243,300? We're going to see these questions again and answer them once we have done our salary scale calculations. Here is the calculation. It says, at the beginning, she is starting with 156,000. This is the annual salary that she's starting with. This is going to be in year one. In year one, there will be no increase, but her annual salary will be 156,000. No increase, but her annual salary will be 156. That can allow us, therefore, to calculate the monthly salary. How do we do that? We say 156,000 divided, how many months are in a year? 12, thank you. So you divide this by 12, and this will give you 13,000. 13,000. In the following year now, which is year two, there will be an increase, and the increase is 16,500 for the year. So the increase here is 16,500. That is going to change her annual salary in this case. She will now say 156 plus the 16,500. That is going to give you 172,500. 172,500. I want you to grab your calculator. Help me to calculate how much is the monthly salary. How will she get that? She will say 172,500. Divide that by 12. That will give you 14,375. 14,375. In the third year, she will still get the same increment of 16,500 until she reaches 205,500. So we still give her 16,500 as an increment. So the annual salary, therefore, will be 172,500 plus my 16,500. Then you get 189,000. 189,000. I know you still have your calculator. Now calculate for me the monthly salary. You're saying 189,000 divided by 12. On your calculator, you should be seeing 15,750. Thank you so much. In year four, she will still get the same 16,500. Then we will now say 189,000 plus 16,500, 205,500. You see now, she has now reached this amount. Once she reaches this amount, we will stop increasing it by 16.5. It will start increasing now by 18.9. Let's get the monthly salary. We will say 205,500 divided by 12. How much do you get on your calculator? 17,125. In year 5 now, remember what I said. The increase cannot be 16.5 anymore. The increase is now 18,900. 18,900. So if it's increasing by 18,900, the annual salary would therefore become 224,400. 224,400. I now need you to calculate the monthly salary. 224,400 divided by 12. You should be getting 18,700. 18,700. In year 6, she is still getting an increase of 18,900. So I'll say 224,400 plus the 18,900, and then I will now get 243,300. 243,300, which is this one here. This is 243,300, like that. Now, when you have your 243,300, you divide it by 12, how much are you going to get? You will get 20,275. That becomes your monthly salary, 20,275. When we have calculated this, I want to see if there are questions that we can answer already. Let's see. Here's the first question. It says, calculate Gwen's monthly salary in her first year of employment. So this is the first year of employment. What we want is the monthly salary. How much is monthly salary? 13,000. So we have an answer here. 13,000 is Gwen's monthly salary in the first year of employment. Second question. What will her annual salary be in her third year of employment? Third year of employment, this is the third year of employment. Annual salary, here's the annual salary. So in the third year of employment, she is getting 189,000. They want the annual salary. Annual salary, it is 189,000. Question number 4. What will her monthly increase be in her sixth year of employment? What will her monthly increase be in her sixth year of employment? This is the sixth year of employment. We want to know her monthly increase. The monthly increase is 18,900 divided by 12. And this is going to give you 1,575. So the monthly increase therefore becomes 1,575 rands. Question number 4. It says, how many years would she work before she reaches 243,300? Before she reaches this, how many years does it take? It took her how many years? It took her 6 years for her to reach 243,300. Okay, I want us to look at the next question. It says, complete the salaries journal. Let's quickly do this together. We have to have somewhere we are going to put in the information. So here we have our deductions as well as our contributions. Let us see when we do it at the same time. There it is. So first we need the employee. What is the name of our employee? Our employee is Busi. So we come here. This is Busi. How much is her gross salary? We are told she earned 198,600 per annum. So I simply take this, I divide by 12. It will give me 16,550. This is her gross salary. Let us now get more information. And it reads, on the deduction, we have pension fund, and pension fund, it is 8% of the basic salary. That means I'm going to come and take my basic salary, which is 16,550. I would then calculate 8% of that. That is going to give me, please punch that in your calculator, if you say 16,550 multiplied by 8%, you get 1,324. So I'll come here to my pension fund, 1,324. The second aspect, I'm going to do my contributions at the same time. It then says, 2 rand for every 1 rand contributed. So I'll come to my pension fund. My deduction was 1,324, and the employer is contributing 2 rand for every 1 rand that has been deducted. So I'll come here, I'll multiply that by 2. That will then give me 2,648. So I'm done with my pension fund here. Let's quickly go to the next one. SARS Pay As You Earn. When you look at your SARS Pay As You Earn, they're telling us that it will be 16% of taxable income. What is my taxable income? That is my gross. So I'll take my gross, 16,550, multiply that by 16%. Punch that in your calculator, you will get 2,648. 2,648. Let's go now to UIF. It says, from the employee, the company will deduct 1% of the basic. 1% of the basic is how much? The basic is your 16,550. So I'm taking 16,550, multiply that by 1%. That is going to give me 165 rands and 50. I'm going to come to my UIF, 165 rands and 50. Then the employer's contribution is also 1% of the basic. That means here I'm going to get also 165 rands and 50. Then lastly, I have my medical aid, 1,200 per month. So medical aid, the deduction is 1,200 rands per month. And the contribution is rand for rand. That simply means I take my 1.2 and multiply by 1, rand for rand. My contribution will become 1,200 as well. I would then add my pension fund, my medical aid, SARS Pay As You Earn, together with my UIF. I'll get 5,337. 5,337, remember the 50 cents. 5,337 and 50 cents. My net salary, therefore, is my gross minus my total deductions. It will give me 11,212 and 50 cents. Once you have got your 11,212 rands and 50 cents, you have completed your salary journal. It is very important, dear learners, that you continue to practice this. We are going to go for an ad break. See you shortly.